So I'm going to start where Phil just started just a few minutes ago with the stock move. Stock down just about 4%. So you have a buy rating on the stock, same as everybody else on the street, but your price target is at 270. You're a bit more bullish than the average analyst. Average analyst is about 214. Today, now that we've seen this strike happen, does this meaningfully change either your rating or your price target?
We can't talk about that, but I think our price target is based on a long-term view that the company's fiscal 27 free cash flow 26 will be based on normalized production rates in the 40s on the max. And as Phil just said, we're way below that, so it's almost a moot point. But there's been constant paper cuts, whether it's the January 5th accident, which was more than a paper cut, that slowed production. There's been constant issues, whether it's the 37 or the 87, that just prohibited them from getting up to rates. Now, going back to the 2008 strike, production was essentially double what it is today on the max. So those are hard to fathom how low production is today.
So again, stock price is down right now. We're just showing the year-to-date chart. Stock's down big this year after a number of incidents, safety incidents, and also over the past few years, just a number of incidents impacting confidence in this company. What's the financial impact as we look at this? Phil was mentioning the last strike was around 45 days. Not clear how long this one's going to take. Do we have a sense of the financial impact on the bottom line of this company?
Yeah, in 2008, I believe the strike was 58 days, and that strike was a lost impact of $2.5 billion of free cash flow, $1.2 billion of net income. But the company was at such higher production rates, so let's call production rates and inflation a net. We could sort of assume half those figures every month, so about $1 billion of net income every month that's lost. But it's really hard to size it, and I think this is especially coming at a time where Boeing's having so much trouble going up the learning curve, is so scrutinized by the FAA and everyone else, rightfully so, that a work stoppage really impacts the workforce's flow naturally when we're trying to get up in rate. And they've been doing that gradually in the months of June, July, and August, despite them being slow production months. So I think, financially, let's call it $1 billion every month. And, Boeing has a lot of pressure to not lose that given where its balance sheet is right now as well. So I'm sure Boeing and the IAM union will come together quickly, is my guess. I know it is a 25% wage increase that they received. Some of the bands get a little higher than that. And what we're anticipating is 40% is where they could end up, just given where we've seen other unions shake out.
Yeah, our Phil was saying that 25%, I guess that's the aggregate number. They're not happy with that. He believes it could take a number of other meetings and negotiation sessions to possibly get up to that 40. But it sounded like he believes that's going to take quite a bit. I want to shift from the impact on Boeing to the impact on their customers. Both you and Phil mentioned this is a slower production time for Boeing. But what does this mean for their customers that are looking for deliveries of planes down the line? Does this impact that?
We've seen that impact. Boeing deliveries, our estimates were 500 to start the year on the MAX. We're down to 350 today. We've cut 150 given all the incidents that have happened this year. So, of course, it slows production. Our back half forecast is Boeing to deliver about 38 a month. They're delivering about 30 MAXs a month. So, of course, it would slow that. But don't forget, Boeing has 200 MAXs sitting in inventory. That gives them some buffer to quickly deliver those once the strike is resolved. So, yes, it does pressure the customers. But I think more focus, we have another impending strike coming up. We didn't talk about that. Air Canada, they're set to strike on Sunday. That's more of an immediate focus. If you're a customer, once an airline does strike, you can't fly anywhere. Okay. With Boeing, given the production has been so slow, airlines have actually acknowledged the slowness, have cut their capacity to be aligned with that.
So, Sheila, we're laying out a lot of issues. We just mentioned, we showed your estimate actually on the financial impact per month, $1.25 billion. It sounds like up to $1.25 billion in net income. Again, you have a buy rating, you have a 270 price target. I know you can't talk about any changes, but now is the time in your mind, or is it the time in your mind, for analysts just to change their view on the stock, the ratings? I mean, there's been so many bumps in the road, so many issues. We don't know how long this strike is going to last. Is it time to fundamentally change the way we look at Boeing?
Ultimately, we have a longer-term view that this is a global duopoly where there should be pricing power in solid products, and there's no development cycle ahead of us for the next 10 years. So free cash flow should be set to resume once production resumes. Now, of course, for production to resume, you need workers on the factory floor. So I'm sure that's why Boeing's new management team, and we do have a new management team in place as well, will be very focused on ensuring that the strike does not last very long, and that they do set their terms.